G'day folks, Jim here from Orchard Forex. It's Saturday the 5th of September. Well, markets have just finished and it was a pretty volatile end to the week following the generally upbeat US employment report on Friday. The headline unemployment rate surprisingly jumped to 8.4% as compared with expectations of 9.8%, and 1.4 million jobs were added over the course of the month. It didn't help the stock markets though, which finished lower, as we'll see in a moment. And stocks are likely to remain in focus next week, albeit a shortened one because of Monday's US Labour Day holiday. The other major event of the week will be the ECB meeting, which takes place on Thursday. And this is going to be in the spotlight for any indication from the President, Christine Lagarde, of any further policy easing following the deflationary warning from the ECB in August. Traders are also going to be looking for any signs of discomfort from the bank with regards to the recent gains in the euro, which have already been alluded to by the ECB chief economist last week when the euro got above 120 briefly. Anyway, we'll have a quick look at the trend table in a moment, ahead of the charts and the upcoming calendar at the end of the video. If you do find the content of this video helpful, please assist us by subscribing and clicking the thumbs up and sharing with your trading colleagues, as it all helps us to produce improved analysis over the course of time. Before we go and look at any of that other stuff though, we'll just take a quick look at the dollar index here. So this is a monthly chart of the dollar index, and as I pointed out to you last week, we came into some decent support down here at the 76.4% FIBO level of the whole rise since sort of 2017. And we also ran into the 100-month moving average down here at sort of 91 3/4. That's so far provided support, albeit that the monthly charts, the indicators do look a little bit heavy still. So I don't know that we're entirely out of the wood for the dollar yet. If we come back nearer home, we'll just go to the dailies briefly. And as you can see, the daily indicators do look mildly positive. There's not an awful lot of momentum there. Could be building perhaps, but there's plenty of resistance ahead, and I think we're going to probably just chop around. I don't think we're going to see any major momentum this week until Thursday anyway, and possibly really not until the FOMC meeting on the 16th and 17th of September. But the dailies do look mildly positive. The weeklies, on the other hand, are still pointing lower, albeit that we do have this decent support down here under 92. So that I think is probably going to hold for the time being, unless we see any major surprise from the ECB. Okay, we'll just go and have a very quick look at the trend table. Okay, the first thing I think I'd point out is that the euro and sterling do look a little bit heavy. Now, while dollar Swiss looks as though it's got potentially further upside over the next coming days, so I don't think that we're going to see much weakness in the US dollar itself, and if anything, it might make up a little bit of ground with a heavy euro, heavy sterling, and slightly firmer dollar Swiss, which does look as though it might be putting in a longer term base. We'll go and have a look at that in a minute. Stocks are beginning to look pretty toppish to me. The Aussie market's not doing, or it's not suggesting an awful lot, although it's had a couple of pretty badly beaten up sessions. But the S&P does look as though there could be further downside, as does the Nasdaq, although that's not in this table. We'll have a look at that in a second. Gold and silver, not really sure. Further out, they may be putting in a longer term top, but if stocks come off heavily, we should see gold underpinned by some safe haven demand. And the crosses, generally, I'll probably pretty much stay away from those. They're all a bit messy, so we won't look at those in too much depth this week. So moving into the currencies, the euro saw a 2-year high just above 120 on Tuesday or so, and since then it's been pretty heavy, although it chopped around towards the end of the week. This is a 4-hour chart. If we go out to the dailies or even the weeklies we need to go to really, you can see we have not been to these levels since sort of mid-2018. So that didn't last very long at all. We have come back. We've managed to close the week above this long-term resistance, now support line. That comes in at sort of 117 3/4. Just about touched that on Friday, and closed a little bit higher. Nearer home though, as you see, this is a 1-hour chart. We saw after the non-farm payrolls, we saw this sharp fall down to the weekly lows, followed by an equally rapid rise. and then really finishing pretty much unchanged on the day. The hourlies look pretty neutral, as do the 4 hourlies, and I think with the US holiday on Monday, we're probably not going to see a great deal of direction. I think the EU Centix is the only item on the calendar that's likely to provide any direction, and I think that'll be largely ignored. So I think probably 117 3/4, 118 3/4 will probably cover it early in the week, albeit I do think if you look at the daily charts, it does look a little bit heavy. So it wouldn't be surprise me to come down. This trend line here is at around 117.40.50. We might try and test that, but I don't think we're going to break below it ahead of the ECB meeting on Thursday. Also note the bearish divergence. We've got higher highs here and lower highs on the indicators, suggesting that if anything, the weakness or the risk is to the downside. So if we got under 117.40, then I think we can probably head back to 117, possibly lower. But really, until the ECB come out and do their thing on Thursday, I suspect it's probably going to remain pretty choppy. Dollar yen, I'll leave that alone. It's really pretty tricky all the way through. It's not doing an awful lot. The daily indicators are pretty neutral, so there's no point spending too much time there. Sterling's in this nice rising short-term uptrend. This is a 4-hour chart. Did come back and test that line on Friday, but bounced. The indicators aren't really showing us a lot for Monday. As I say, this is just a 4-hour chart. The dailies look a little bit toppish, but while we sit on this support here, I'm not really sure we're going to do an awful lot. Having said that, the official Brexit negotiations resume this week in London, so things are not looking real special there, and it could be that we do see some downside pressure on sterling. Euro sterling is obviously going to have a few gyrations, but as far as the dollar is concerned, a break of this level down here, 131.80 or so, that could see us head back towards 130. Remains to be seen at this point in time. If the Brexit talks are successful from the UK point of view, then obviously the uptrend will remain intact. Dollar Swiss is looking interesting on the charts. We've had lower lows in the price action here, but the MACDs appear to be pointing a little bit higher. We've got some bullish divergence. It does look a little bit basish here, dollar Swiss, so it wouldn't surprise me to see us try a little bit higher. So we're finished at 91.30, and we've got resistance coming in here. I guess at these highs here, so that'd be 91.90, so 92.10, somewhere around there. If we got above this level, 92.30, then we can head up to the 38.2 level. But I really am not sure that we're going to see that early in the week ahead of the ECB. The commodity currencies. Here we have a 4-hour chart of the Aussie. The Aussie did try and break to the downside, got down to 72.25 before a bounce later in the day. Tried to break down through this rising trend support, didn't manage to do so, not at the first attempt anyway. The 4-hour chart's looking vaguely negative, but the dailies, more importantly, they're showing quite a marked degree of bearish divergence. So I do suspect that possibly we are going to see an eventual break lower to the downside. I think that'll probably depend much on the stock market direction. If stocks go lower, the Aussie will go lower with it. And below 72.25, I guess the levels that we should be looking at are the FIBO support. We'll have a look at the 4-hour chart here. At this FIBO support here, so we come back to the 23.6. We've held that so far, but if that were to break, then I think we probably head down to this sort of 71.60 level, which is some way off at this point in time. So 72.25 was where we got to on Friday. 72 cents obviously will provide support, and then beyond there, sort of that 71.60, as I say. That's probably a stretch too far early in the week. On the top side, I prefer to be short still, frankly, with a stop loss. On Friday, I had it at about 73. I'd probably lift that a little bit, sort of 73.15 or so, have a stop loss up there on any shorts that are put in place. The Kiwi looks pretty much the same. The Kiwi is also showing this bearish divergence, and I think we might be putting in place a bit of a top. The trend line support, that comes in at around here 65.80 or so. That's some way off at the moment. If we look at the 4-hour charts, there we got down to here on 66.70 or so, 66.65 on Friday. There's going to be varying degrees of support all down through this messy price action here, but I think it's possibly going to be a slow grind lower. I don't think we should expect too much really early in the week, but out of choice, I'd rather be short than long. Probably looking to sell it around 67.50 with a stop loss above last week's high here at 67.85 or so. So possibly a stop loss above 68 cents might be a sensible plan. Now moving along to the stock markets, as we know that they had quite a sell-off over the last couple of days. The S&P, this is a daily S&P chart. It did recover from its lows, that low seen after Friday's non-farm payrolls, but the daily indicators are beginning to turn a little bit lower. The weeklies still pointing higher, but they're pretty overbought. So, and there is some bearish divergence, as you can see in the RSIs. The 4-hour charts looking heavy. The indicators are beginning to point to the downside quite dramatically. So, on that case, 33.40. This level here will be support. That's some way off at the moment. That's sort of 70 points away. So we probably aren't going to see that early in the week. If we do go through there, though, I think we can eventually head down to this 32.5 level. It's hard to see anything that dramatic happening as we approach the FOMC meeting, as I say, though. So on the top side, I think we'll probably sell into rallies here. 34.76, 75, something like that, with a stop loss probably placed above 3,500. Overall, I think with the way the daily chart's looking, the medium-term momentum is probably to the downside. The Nasdaq, likewise, has seen a pretty sharp sell-off. It's come all the way back to its FIBO support, although it rallied off that at the end of the session on Friday. But the daily indicators are beginning to point quite sharply lower. Further out, the weeklies are incredibly overbought, so it doesn't look as though there's much room for upside momentum here. I would definitely be selling rallies, I think. The RSI seem to be running out of steam, so I think if we can break that, we could see some pretty sharp movements in the Nasdaq. So if we go through here, we've got 55-day moving average at 10 or just under 11,000. And then it's not really an awful lot all the way back down to 10,000, and that's only where we were in June. So it's no great shakes. But June, July, we didn't break up above 10,000 until 17th of June. So we've had a 20% rise in 2 months. So we're correcting that basically. The Aussie market's looking pretty heavy as well. Probably not helped by China's and Australia's standoff over politics and Chinese tariffs on certain Australian commodities exports. But the daily indicators aren't showing us an awful lot, but they do look a little bit heavy. Having said that, we're still between this 100 and 200 day moving average, so that may well provide some kind of bracket early in the week. But having said that, the further out the weeklies, we have made a significant break to the downside and closed below the 200-week moving average. The weekly indicators are still pointing higher. Well, the MACDs are pointing higher. You can see that the RSIs and the stochastics are rapidly running out of steam. So once again, selling rallies is preferred. Gold, I won't spend too much time on gold. It's become very choppy. The market's caught long. I think everyone was very bullish and enthusiastic about another run back towards the highs. I'm not sure that's going to be the case. The 4-hour chart's not showing us a great deal, but we've got this support here in the sort of 1900s or 1880 to 1930 level, I suppose you could call it. The daily charts look heavy though, and I'd rather be short than long. The weeklies also look as though they're topping out. So while in the longer term, I still think gold can move higher. It seems to me that the positioning is overly long, and we could do with a bit of a clean out before we can make any dramatic move to the top side. Same really applies to silver. I won't go there, but oil had a pretty sharp move lower on Friday. This is a 4-hour chart, and it moved down 5%. It's back down at 39.5. But having said that, with these white lines here, this channel, we're still stuck within that, and that's been going on since mid-May. So while oil does look heavy, and it could go low if the economic recovery looks as though it's slowing, oil possibly will head back down towards $35. over the longer term, I still suspect we're probably going to chop around near 40. And eventually I do still like the idea that we might break higher, but it's looking a bit precarious at the moment. We're well back below the 255-day converging moving averages with this $43-44 a barrel resistance lying ahead. So that doesn't look like it's going to be taken out anytime soon. And if anything, the dailies are just beginning to point a little bit lower. I did speak about copper last week, and here we have a monthly copper chart. And as I mentioned last week, it looks like we could see a break above 3. Now, we did close around this 307 area in August, and in the first week of September, it's been pretty choppy, but we've closed near the highs, 307.30 or so. And it looks as though we could go a little bit higher. The one thing that would worry me about the copper price is if there is an economic slowdown, copper is going to find it very hard to rally. So keep an eye on that. But from a technical perspective only, it does look as though we can make further gains to the top side. And on the monthly chart, the immediate level would be this sort of 328. That's some way off, of course, at the moment. That's the 50% pivot of the whole move down from 2010. So it's possible we could get there, but as I say, if the numbers economic numbers continue to slow, then copper's going to find increasing headwinds. So we'll just finish up by looking at the calendar. Okay, so here we have the calendar, and the major feature of the day is the US Labor Day holiday, which will probably take all the action out of the market. But we have got the Chinese trade balance early in the session. After that, there's not a great deal to go on. Tuesday, we've got the Japanese Q2 GDP, German trade balance, and then the EU Q2 GDP. And they're not going to be very pretty numbers ahead of Thursday's ECB meeting. So they'll be worth watching out for. Wednesday, some more Chinese data, the inflation numbers for August, and otherwise we've got the major event later on in the day will be the Bank of Canada's interest rate decision. The ECB meeting will take place on Thursday, as I've said. No changes expected to policy, but the bank may try and talk down the euro, as we previously mentioned. And then on we've got the USPPI. Later on, we've got the press conference as well from Christine Lagarde. And then on Friday, the major event really will be the US CPI late in the day. And ahead of that, we've got the UK manufacturing numbers and the German inflation numbers for August. So that's about it for the week. We'll leave it there for now. Hope your trading goes well, and please don't forget to hit the subscribe and like button if you found the video useful. So we'll talk to you later in the week if I see anything worth putting up on YouTube. So